I'm not a financial advisor. I'm not responsible for your profit. Your loss is only your profits. If you've been investing in financial stocks, you've been killing it, and they all reported pretty much generally very well. That's good. PPI, pretty flat. CPI, all the non-housing components, are obviously doing well, under 2%. We're still tracking to 2% inflation. Our problem is our debt and deficit.
Get ready for a new episode of KP Talks Dollars and Cents. Learn financial literacy and get real-time updates on all things housing, finance, and real estate. So let's get started. Here's your host, Kevin Perenio.
Hey, it's KP coming to you live from Newport Coast. We're at the Carrington Charitable Foundation event. This is an amazing event. Check this out. Happy Indigenous People Day, Columbus Day, and National Dessert Day. Get those cookies, tits treats. Check this out. All these auction items, raising funds, and I'm going to tell you what the mission is in just a second. Little cheese spread. Check this crowd out. It's their biggest crowd at the best charity event.
$27,000. Travis says, come on. 27. Yes, he did. Thank you, Daddy. That was $28,000. 27, 28.
Somebody just bid $28,000. Thank you for, I don't know, some prize, something. But they raised like $2 million last year. $2 million. So what's incredible about this event? Their CEO and founder Bruce Rose was up there, and he has a couple sayings. So they talk about giving our wounded veterans mobility, right? So if they come back and they've experienced a traumatic brain injury or perhaps one of their limbs, unfortunately, is having an issue, they try and create mobility. They have booked through their Veterans Air Flight Foundation over 9,000 flights for 22,000 passengers. That's taken them to the hospital, Walter Reed, Disneyland, whatever the case may be. Carrington themselves have had 250 flights. Bruce has piloted 50 flights. It's really impressive. It's a calling for them. And then, of course, they, after mobility, they create stability. So they have helped build 29 houses that are enabled for someone who may have experienced an injury in the war and many wars, Iraq, Afghanistan specifically, which, by the way, they've been around since 2008, the Carrington Charitable Foundation. And Carrington themselves has been around for 21 years in September, which is coincidental because PRMG's been around for 23 years, and we were born right around 9/11, the 9/11 in 01. So some synergies here between our companies. Now, if you are sleeping on your couch because you are a double amputee and you can't get to your master bedroom upstairs, they literally help, redo houses or put someone else in another house. 29 houses since, I believe, 2014. Then they try and get purpose and then prosperity. So purpose, they have a vector program where they put people through training, sometimes a year and a half worth of training, to help integrate the less than 0.5% that have served our country, to give us and afford us the luxury of civilian life, to get them reintegrated back into civilian life. And then, of course, prosperity. So you get someone purpose, you get them a job, you get them a career, you get them a calling. After they lost their identity of being in the military and fighting for their fellow man and woman next to them, they get back home and it's like, what am I supposed to do? And so there's a lot of talk about 22 veterans committing suicide every day and how they're trying to move the needle on that. So, incredible event, amazing. Can't say enough about this. Okay, let's talk about some other stuff. Let's talk about the markets real quick. So, what the hell? 50 basis point rate cut, and rates have gone up. We got a bigger problem. It's not inflation. Although bond markets think inflation might be a little higher or stickier than normal. But the real problem, and of course employment is still decent. It's not insanely robust, but it's decent. The last job survey had a very low participation rate in the survey, and there are a lot of adjustments in there for demographics and whatnot. So that could lead to further lower revisions later. The real problem is the third leg of our mandate. And I talk about the tri-mandate. It is not a dual mandate. It's not just maximum employment and moderate inflation. It is long-term moderate interest rates. Look at the higher end of the yield curve, 30-year treasuries, 20-year, 10-year. Look at the 10-year. It's been running up with a 4 handle. Bond traders don't believe that we are doing what we need to do to handle the $1 trillion in interest payments our country makes every year. Interest on all the money we owe is $1 trillion a year. That's 3.1% of our GDP. Obviously unsustainable. So the Fed's going to keep cutting. They've got to cut. They've got to cut the rates to bring the interest down on new issuance and reissuance with, cheaper dollars. The dollar's been strengthening because the rest of the world sucks, especially China. They've had to deploy tons, of stimulus in their economy. And they're the second biggest economy in the world. Germany's flat out recession 2 years in a row. Flat out deflation. So our long-term debt is unsustainable. The Fed is going to keep cutting. They said they're going to cut. They're going to keep cutting. And one of the big reasons is the third part of the mandate. They've got to bring the interest payments down. So that's what's going on in the markets. It's Q1 earnings season. All the big banks have reported, and generally are pretty good. So banks are doing well. If you are, I am not a financial advisor. I am not responsible for your profit. Your loss is only your profits. If you've been investing in financial stocks, you've been killing it, and they all reported pretty much generally very well. That's good. PPI, pretty flat. CPI, all the non-housing components, are obviously doing well, under 2%. We're still tracking to 2% inflation. Our problem is our debt and deficit. And I got to tell you, it's a big deal. We'll be talking about it next year. We'll talk about it during the election. Neither candidate wants to address it. Maybe they'll address it next year. We'll see. Okay, what else is going on? A lot of Fed speakers this week. Obviously, retail sales reports coming out this week. That's a big number. Let me go give you one more look at this absolutely incredible event, and then we'll roll out. And, we're halfway through October. It's unbelievable. This year just keeps on rolling. I feel like this third rock from the sun, barreling through space. We're just going faster and faster. Someone just raised $27,000 for one auction.
Bidder 122 is going to the U.S. Open down in Radical. Chuck Williams. Congratulations, Chuck. Thank you so much.
All right, ladies and gentlemen, we are on our next auction item. You're going to want to listen to this, and I'm probably going to butcher it because reading's not my forte. I missed the sign says bomber.
There's Jay from CoreLogic. Hey, you made the LinkedIn
But
video.
the next one is
They paid $25,000 to be a humongous sponsor. Shout out to CoreLogic. Here we go.
Luxury by night. Travel to the exclusive Still Point Lodge. Spend 3 nights and 4 days in Nashville and the prestige.
All the good guys here. Snap dogs from the house. Nolan, I snagged a sip of your wine. Just a sip.
A perfectly curated
Cheers.
experience.
Hey, it's KP coming to you live from Culver City. We haven't done an update on my construction projects. My buddy Jason's over there hiding as usual. Got some actual news as well, but let's have some fun. That's the house we sold a year ago this month, $4.8 million. And this is Culver City, so we're outside of LA. You can actually see the Hollywood sign. Oh man, you're really gonna have to pause this video. Let's see if I get my hand out of the way. Okay, right below my thumb here, through those trees, is the Hollywood sign. You can't really see it on my phone because I can't really zoom in here, but I can see it pretty clear up here. So this is in Culver City. This is a huge project. My buddy Jason, he negotiated with the software guys in the Bay Area who owned 1, 2, 3 properties, okay? And so I think they're a little over their skis. So we bought this from them, and then he negotiated, and it was already kind of through the planning and permitting stage. So we saved some time and money, of course, on carry costs by taking this over after they already had some plans approved and whatnot. That's a big deal. So then he would also help them develop those two. So he's very hands-on. So there's 2 units over there, and then this whole same amount of block is our one house. This thing is a monster. This is the 3rd story outdoor patio, which is like we wouldn't normally put this in because it's a big expense, but they had it in the plans and we didn't want to mess with it. So you're gonna have a kitchen here. There's literally I swear to God, there's 4 kitchens in this house. It's crazy. All decked out, just stuff going on here. I'll give you a little tour. Okay, so while we're walking downstairs, Retail sales came out today, and it was a little hotter than expected. That's the big tier 1 data point of this week. Not a huge market mover, but the bond market and the traders are getting into this not no landing, hard landing, soft landing, hard landing. They're in the no landing camp. We're just chugging along. The economy just keeps on chugging, and that's good. So far, so good. Retail sales were up 0.4%, and then when you exclude, I think like autos or something like that, it's like 0.2%. And so, when rates come down, autos start to sell. And so we'll see a little boost there, obviously, with lower interest rates. So when the Fed cuts 50 basis points, new credit lines, cars and autos and consumer credit lines, their rates all come down right away. So that's good news. Now on the job front, weekly jobs claims came out, and it was 241,000 new jobless claims, and I think the continuing number was over 1.8 million again. So if you were out of work, it is hard to find a job. Speaking of work, let's talk about this Kinsey study that just came out. Said that by the year 2030, 800 million jobs globally will be automated. I've been seeing all these videos for a week now, this Tesla robot Optimus and all the stuff it does, construction. I want it to serve drinks and do the laundry. My wife hates laundry. And so 70% of all jobs should take a pay cut of remaining jobs after the 800 million jobs, if they were all lost. So there's a lot of corporate responsibility for owners of companies to not use automation to get rid of people. It's to enhance the people they have and then try and grow and scale. And that's our mission for many, many years. I'll talk about that quite a bit. Okay, back to the tour, then I'll get back to some more data. This is a massive, ensuite guest bathroom and little balcony, and see that little hole in the wall or on the floor? That's the pooper. Closet, laundry room. Here is an ensuite, and it's got a little closet here. Jack and Jill bathroom, or is that Jack and that Jill? Maybe it's Jill and Jill. I don't know. Jack and Jack. So here is one bedroom, and this other bedroom is pretty cool. So this section right here is pretty cool. So this wall where I'm standing right here, okay, on this frame, this wall can pivot. And so we could either close it off, and this could be a little bedroom in here, or you can open it up and have it pivot to where the entire little living area right here is part of this, or you can kind of do halfway, or you can do it full way. Kind of a cool thing. And then this master is crazy. Primary, whatever you're supposed to call it these days. This is her closet, ladies. This is a hers closet. So we are thinking about the ladies at all of our projects, and they are winning. This is the primary. Okay. And this is the bathroom. So there's glass here, sauna. Here's where it gets glassed off in the shower here, dual heads. And then you got this looking out here into the pool, which has not been dug yet, right there. And that's an ADU, which this is not the staircase. We haven't built our staircase yet. This is an outdoor patio right here, which is pretty sweet. So, okay, so while I walk down this shaky temporary stairs, I walked the scaffolding earlier for different video, my Instagram. This is a little shaky. Anyway, so what else going on? The COLA, the cost of living adjustment by the Social Security Administration, was released. Now, that's an indication on inflation. So is inflation sticky? Is it tame? This or that? The cost of living adjustment for this year is 2.5%. There's the elusive Jason. There he goes. We'll be on a plane tomorrow. Going to watch Texas beat Georgia. Let's go. Hook 'em. So last year it was 3.3%, and the year before was 8.7%. So that is at least, let me just say this. I'll throw my conspiracy theory hat on, or maybe it's reality. 2.5% is really close to the 2% target for Fed's inflation. We all know cost of living is going up more than that, but that's all Social Security is getting. So my mom, everyone's elderly parents, everyone that's on it, they're getting a little bit of a break. But the reality is, maybe our country just is a little broke. This is an ADU, another kitchen here, full-blown kitchen. There's the bath. We love to do like the bar kind of vibe right here next to the pool. So there'll be like a little like double glass thing here going out there. And then I'll walk you guys over to the kitchen. So that's my inflation update with the cost of living. And by the way, let's talk about taxes. Talk about being broke. There's this whole myth about like tax evasion going on. The tax year of 2022, calendar year, the final numbers came out. Shout out to Doug Eakin with the Daily Dish. I met him at the Enact Executive Summit. Awesome daily email every Monday through Friday. And he really broke down taxes. Like we have a tax gap, right? So 85% of taxes are paid timely and in full. October 15th just happened. For those of us that are self-employed, we had to file. I was in a return position, and not a big one. And so the gap, that 15%, is about $698 billion are not being collected timely. Either they have not filed, or they underreported, or they could like a partial pay. And 500 million of that 698 million are from individual filers. The rest is from like 127 billion is from like corporate taxes, and I think 50 is like estate tax or something like that. So that's normal actually, because you go back in Doug's email, he said that's pretty normal for the last couple of years. So there's not a lot of tax evasion going on right now. So don't believe whatever you hear out there if there's anyone hearing that. I'll finish up this tour here. This is the kitchen. This is the massive living room. We got kitchen here, and then slider doors to another outdoor kitchen, so covered outdoor patio to go with the kitchen upstairs and the other outdoor patio. So it's 3 kitchens plus the kitchen and the ADU. So we go 1 kitchen, 2 kitchen, 3 kitchen, 4. Anyway, there's a lot. So here's the stairs. This is kind of cool. They're obviously not built, but pretty heavy duty down here. We have another ensuite right here. Jason walking the property. A man alone with his thoughts. Okay. This is like a library right here. And then here we are. Let's grab a drink. We are leaving. We're going to go have a drink somewhere in Culver City, and then have a dinner with Salesforce tonight in Beverly Hills. And then I had a lunch with MQMR, Ben Maddox co-founded company, along with Lisa Butler, and was it Scott Weintraub, right? He's a sharp dude. Look at these business cards. Look at this. Look at this. Look at these little business cards. Pretty cool. Anyway, here's our street. We have a fourplex down here on the other end of the street that would add 2 ADUs to, and we'll make it a 6 unit and then keep it and rent it. So anyway, here you go. Street view. Texas gonna be Georgia. That's gonna be close. So I'm not gonna get too confident. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.